I know we make this joke every year, but I don't think it's dead yet. So we're finding product market fit for risk-weighted assets.
Yeah.
That's why we're all here. We need to fix the acronyms. We need to fix the core, words that we've made up in the very small crypto circles. But what that means is that once we do, we can truly bring it out to a much wider audience and we can see real adoption. So what I wanted to do in this conversation today was play back the external perspective of what Janus has accomplished over the last year, but then actually double click and see what it's been like from the inside. How was your experience driving that internal change, seeing that adoption, growing those tokenized funds, making it part of your strategy? And what are some challenges that you still face, internally and externally? So I am excited to talk to you because I know you're going to tell it how it is. No sugarcoating what's working, what's not. And I want to use this audience because we have the people in the room who are either building in DeFi and they're solving these challenges from the developer side, or they're growing adoption and scaling it in TradFi. So we really need those two perspectives together to actually drive real change in the industry. So I'm going to play to you what I think Janus has done in the last year, and then I'm going to have you play to me, how did it actually work from the inside out? A year ago, you started talking about, at least from within the halls that we've understood, your blockchain readiness strategy, getting Janus ready to adopt blockchain when the time was right. We saw a $1 billion RFP from the Spark Grand Prix, which is a call to action for folks to bring T-bill products to market. Janus partnered with Centrifuge. We got the fund rated by Moody's, S&P, Particula. We were a winner alongside BlackRock, grew that fund to $400 million. Then you brought your tokenized JAAA strategy on chain, got the largest single investment of $1 billion into that from launch. And then now you're next doing S&P 500, the first index fund that's actually licensed by S&P. So absolute incredible journey in such a short time. I want to hear from you, what was that process like internally? Was it that easy? What barriers did you face and what did you have to work through to actually drive that change and adoption within Janus?
Yeah, thanks. I guess it's like much better to be lucky than good. And so a lot of things had to come together. But also, something I tell my kids pretty regularly, like well-prepared people get lucky, right? And so the path was, you mentioned blockchain readiness, and I had spent probably the last 6 years trying to find a way to get Janus into the blockchain space, and fortuitously had just finished getting kind of board sign off on a long-term blockchain strategy, and probably a month before the RFP came out, had sat in front of them and said, okay, here's why blockchain matters. We don't know how long it's going to take, but here's a future vision of what could happen in the industry. And if we think there's even a small possibility of this kind of transformation, but we don't know how long it's going to take for that to be realized, we need to be ready. And it may be 2 or 3 years before I come back to you with a project that kind of delivers on this strategy in any sort of meaningful way. And then a month later, I was like, okay, never mind, we have one.
We're ready.
Right? So, without that prep work, we wouldn't have been able to get it done. But look, I think our journey definitely, probably the lesson of it internally that is probably most relevant to builders in this room is that 10% of it was about the opportunity, right? And I had done that work. 90% of it was about the risk. Maybe more than 90%. At every single point along the way, if it wasn't going to happen, it was going to be some sort of kind of concern, and there are many, of how does this affect us? What's the risk? What's the downside? And it, can be as kind of ignorant as well, what about FTX? Or, these types of things that it's just Bitcoin is used for, illegal activities or whatever. These very, very generic concerns down to extremely relevant and meaningful concerns around, okay, how are we comfortable that, Centrifuge's technology is robust? How do we know that, the basic AML and KYC is in place? So, there's all of these very, very, very concrete issues that traditional asset managers and other people in finance face. And ultimately, the only way any of them are going to get on board is if there's partners that they're working with that they can get comfortable with the risk. That risk is never going to be zero, but again, zero chance that we could have entered this RFP, let alone won it, without Centrifuge, right? So that you have to have kind of a best-in-class partner who has the ability to speak the language of traditional kind of financial players and mitigate those concerns around risk. Again, not zero. If you're a financial institution that is not willing to take any risk, you're not going to be in blockchain in the near term. You're just not, because there are risks, right? And some of it's just simple things like rep risk, right? But ultimately, you have to find those institutions where there is some risk appetite, and you have a partner, and many of the people in this room are trying to build those types of partnerships that can help to kind of get those gatekeepers comfortable.
And have you found that the risks, there are fewer risks over time, or there's a higher risk tolerance within the organization?
So it's iterative, right? I mean, everybody in this room is a cold-hearted capitalist, but so is traditional finance in a very meaningful way. And so, yeah, a little bit of success goes a long way. If you take some risk and you have, nothing to show for it, even if the risk didn't materialize, the appetite to take that risk again is much lower. We're a $450 billion manager. Most of my career, I've been building our ETF platform, which is, $40 billion. It's 10%, but it's a huge percentage of the growth. What we have right now in tokenization is $1 billion, a little over $1 billion, which is amazing. And also, like, from a macro perspective, like, totally irrelevant to our P&L as a company, but it's growth, right? And so the thing is, there's like the current P&L, and then there's where are we going, and where we've been going for the last 20 years is this shift towards ETFs, and that's been most of my kind of career. And to the extent that people are slowly starting to understand that potentially the next 10 years or 20 years actually isn't about continued ETF adoption, it's going to leapfrog into tokenization, then $1 billion starts to seem really interesting if it's going to grow at 50% or 100% compounded, right? So 100%, like, the results drive increased risk tolerance.
Yeah. And then at Janus, you're balancing tradition and being such a large and institutional, well-known and respected asset manager with innovation and being very early into blockchain. How do you manage that dichotomy internally, and what challenges do you still face?
Yeah, I mean, at the end of the day, it comes back to this basic thing about growth. Like, if you look at, like, even our earnings calls, a significant percentage of what we talk about on our earnings calls, so Ali Bhaji is our CEO, a significant percentage of that is talking about things that are relatively small but growing quickly. And most of traditional asset management, for sure, but other parts of finance too, are in sort of, they're very profitable, but they're stagnant. There's very little organic growth. They grow because markets go up, right? And so we're in a lucky place where even if we have outflows, if markets go up, we're growing. So finding those places where there's an incremental shift, where we talk about building the asset manager of the future, right? Like, that's our objective. We're going to build the asset manager of the future. Well, what does that mean, right? So we have to have these tangible things. It's not like Janus is putting all of its eggs in the tokenization basket. Like, there's many other things that we're doing, looking for growth and innovation, whether it's private credit with our acquisition of Victory Park, whether it's, insurance deals. We just did a $50 billion deal to take on a bunch of assets for Guardian, which is a large insurance conglomerate. Like, we're looking for all of these interesting areas for growth. But at the end of the day, those pieces, as long as you can get mind share with particularly our board, but also just generally senior people around the organization, so there's broad-based support around the potential impact of tokenization on the industry, then people will start to pay attention. Now, you have to go beyond that to, like, implementation, right? And implementation is pretty hard. And again, we got more lucky than good in terms of finding the partnership with Centrifuge and therefore being able to execute, right? Without that, I mean, I would be sitting in a conference room, talking about this. Wearing your suit still? Probably not, but yeah.
It is nice. I was saying that year one, when we did this 2023, we were about 20% suits in the audience. Now that has shifted quite a bit. So we're definitely bringing and embracing a lot of the TradFi, but now the TradFi doesn't wear suits anymore. So it's all circular, I guess. So you mentioned Ali talks about tokenization and Centrifuge in the earnings calls, which is a very prideful opportunity for us. What was that process like with Ali specifically, and with this, convincing the CEO on tokenization and then empowering him to go to the board? Did he get it from day one?
No. And it started way earlier. I mean, I mentioned, it's probably 8 years literally of trying and all sorts of different, I would say over the last 8 years, I had many interesting ideas in blockchain or crypto that we could do. And every one of them got to a point where I was sitting in a room, whether it's with our executive team, whether it's with our board, whether it's with investors, whatever it is, where at the end of the day, in that conversation, there's a whole bunch of people sitting in the room and they're saying to themselves, okay, Nick's pretty convincing. This sounds pretty smart. And we have absolutely no fucking idea what he's talking about. Right? Like, so at the end of the day, in order to take the next step, they're having to just make a bet on whether I know what I'm talking about. And I can be persuasive, but that's not enough, right? It's not like you're never going to get there until there is a third of the room at least that has some idea of what's going on. And so it's building that over time. And Ali came in and he's definitely like a much more innovative leader than we've had at the firm for quite some time. We have a totally refreshed management team. We have a totally refreshed board. And so there's just more and more voices who get it. But no, it was a process with Ali. That conversation started 2.5 years earlier with him.
Yeah. And so we talk about product market fit, and you talk about having talked about blockchain for 8 years with an organization. Why now? Why were you able to do this now? And how, I guess, answer that question, then I have a follow-up question.
So let me answer that like macro, like why is it that there is so much more attention from traditional finance right now? And actually the answer to that, this is just this isn't the specific conversation that's happening, but I am very regularly having conversations with extremely large global institutions who want to understand what we're doing. They're not going to invest. Right? They're not going to go into tokenization in the next 6 months, but they want to understand it. They're like, why are you guys doing this? Right? And almost without exception, the data point that gets them to like pay attention is just this kind of a little bit, misconstrued stat, but it's still a powerful stat around the, dollar volume of stablecoin transactions in 2024 being, in excess of the combined dollar value of transactions for Visa and MasterCard. What does that have to do with RWAs? Right? Like, it's not directly related, but if you're in traditional finance and you hear that, you're like, wait a minute, that is something I need to pay attention to, because it's just directly at the core of very boring traditional finance, payments, et cetera. It has nothing to do with Bitcoin, it has nothing to do with Ethereum or Solana or any of these things. And you can get your head around that. And so it's like, I better pay attention. So it's that, I would say, mind share that's been created. And then the other piece obviously is regulation. So for the last 8 years, it was every conversation I was in, it was very easy for somebody in that room to be like, yeah, this is huge, but it's illegal.
Yeah.
Like they could just, but yeah, we'll pay attention when the regulation changes. And it wasn't true. There was all sorts of things you could do under that regulation, but the pace of change, the passage of the Genius Act, it's just taken away a lot of those excuses. And so those two things have come together to make people pay attention. And then they've got to figure out, okay, what am I going to do? Because as an asset manager, stablecoins is not particularly interesting. Right? I mean, it's obviously a very important thing going on in the world, but for our core business model, there's not that much for us to do there. But it does mean that people are all of a sudden willing to pay attention, think about it, and they have to know something about it. You can no longer be in a boardroom and just be ignorant of blockchain.
Yep. So have we found product market fit?
Yeah, I mean, look, 100%.
All right.
But what we haven't found is the product market fit that's going to there's $12 trillion of ETFs in the US. There's 25 billion of tokenized real world assets in the world. So, I mean, it's this size, right? And so when I say we found product market fit, there are real use cases today that are being understood. But today, all of those use cases is I have on-chain capital and I need access to some sort of return stream that exists off-chain, and this is the mechanism. What hasn't happened yet, and I think we're maybe a little ways away from, is I have off-chain capital and I'm willing to bring it on-chain in order to access off-chain assets.
Yeah.
Right? Those are two very different things, but I think there's a significant amount of growth in providing real-world returns to on-chain capital, and that is what is going to scale to the point that part 2 comes, and when part 2 comes, that's orders of magnitude larger.
And what's needed for part 2 to come?
I think it's two things. It's one, what we just said, which is growth of it can't be a $25 billion RWA market because nobody pays attention. I mean, we have individual products launched less than 5 years ago that are bigger than the total market size, right? Right. So it's just not big enough for anybody to pay attention. So that has to grow, and it has to grow with on-chain capital. And then the second piece is the infrastructure. 100%, it has to be the infrastructure. This announcement from NASDAQ last week is maybe the most significant announcement in tokenization. If it bears fruit, those types of things are what has to happen. Yeah.
Awesome. Well, Nick, thank you so much for joining. We're honored and very, very happy that you chose us as a partner, and really excited to see what is next for tokenization.
Thanks, Bhaji.
Thank you,
Appreciate
everyone,
it.
for being here.